next 40 years. Here he is taking for 35 years, and after taking this income for 40 years, the premium that he have paid 50 lakhs, that will also be returned. So your interest rate is 6.01, which is guaranteed and tax free for next 40 years. Okay, so we are seeing the rates are going down. Here you are getting an interest rate more than 6%, and that is guaranteed and tax free for entire next 40 years. Similarly, 1 lakh paid, client paid 1 lakh every year for 10 years. He waited for 5 years. He will get 1,22,030 guaranteed tax free income every year for next 35 years, and then the 10 lakhs of investment amount returned at the end. So if the policy holder is there, they will get the income. Something happens to him, the nominee will get the income. The income will continue. It will not stop. Even the return of investment will be done to the nominee. So in every way, see the interest rate 6.10, 6.18, which is guaranteed and tax free for next 45 years, 40 years, 35 years. Okay, now coming to the last example where I had promised if somebody would like to invest one time, how it works. So let's see the single premium option. So in fortune guarantee single premium option, if you see the minimum entry age is 13, however the premium uh, paying person's age have to be minimum 18, his maximum age could be 60. You can take monthly as well like annual incomes. It is available both in single life and joint life. Okay, so I'll give you an example. Here if you see the person is joint life, invested 10 lakhs. So by investing 10 lakhs for first 5 years, there will be no income. And after 5 years, he got 73,700 guaranteed and tax free for next 40 years. However, here you can also take it for next 45 years. He's taking income for next 40 years, and after that end of 40 years, his 10 lakhs investment amount will also be returned. So after 5 years, if you see, the income rate is 7.37. He invested 10 lakhs. After 5 years, he will get 7.37 income rate. So 73,700. If somebody invests 1 crore, after 5 years, they will get 7 lakh 37,000 guaranteed and tax free for next 45 years. That to be in joint life. And something happens to the policyholder in the first 5 years. Here, as well as in the regular premium payment option, you will get insurance cover. The insurance cover is 10 times for single life, and for joint life, it will be 1.25 time on one person's death. If the second person, something happens to the second person, you'll get another 10 times. But this insurance cover is only for the first 5 years. Once your income starts, there is no insurance cover. However, your income is guaranteed. So if you adopted income for next 45 years, you'll get income for 45 years. Then again, the maturity benefit of what you invested initially, that will also be returned. So this is how this option works, which gives you a peace of mind with guarantee, with a tax-free income, that to be for next 40, 45 years, and insurance cover guarantee in the initial 4 to 5 years. So I'll now hand it over to Ujjalji. Ujjalji, if you can check if there are any questions or doubts the investors might have, they can ask their questions. Ujjalji, or I can open the chart to see if.
Yes, Mr. Dash.
G. So, okay, so the voice is low. So I'll do again a quick refresher on single premium. So if you have understood this, what is single premium is basically when you invest one time only. So you invested one time 10 lakhs. Then 5 years, if you see there will be no income in the first 5 years. However, there will be insurance cover. And from the 6th year, your income will start. It will go for next 40 to 45 years. So here he invested 10 lakhs. He will get 73,700 for next 40 years. And then again, after the 40 years, you'll get the return of invested amount, which is 10 lakhs back, and completely guaranteed and tax free. Okay, so this is the plan for you, one time investment from Tata AIA Life. So Vanuji, can we take questions directly, or how the questions to be taken?
Yeah, there's a couple of questions. Uh, you said tax free. There was a confusion for a couple of participants saying that I have already covered for ATC, then how it would be tax free. So, what is the difference between tax free, which we say for ATC, and this product?
Right. So, sir, tax is basically on two parts. The first part, as you rightly said, on the investment amount. For example, here 10 lakhs is the investment. So, basically, ATC is what is applicable. But the very important part is on tax on your future incomes. For example, when you start getting the 73,700 every year, and then the return of principal at the end, there will be no income tax on the incomes as well as the maturity. That is very important, because if you are in a 10% or 20% slab, right now you will save only 1.5 lakh rupees, that is under ATC. Just imagine when you will get a 40 years of income of 80,000 or a 1 lakh. So on 40 lakhs amount, okay, if you calculate at least a 10% also, that is 4 lakh. So that is a huge amount of money which could be saved by investing in this plan, where all of your future incomes as well as the return of premium, everything will be free from income tax. So that way it is beneficial. For example, on FD interest, the bank debits TDS, right? So 10% what bank deducts when you invest in a fixed deposit. But you invest here, you get in guarantee for next 40-45 years, no TDS deduction, no tax on the returns. So that is the benefit which is under section 1010D for only investing in insurance cum saving plans.
Sadaship, on the image which we have in the screen currently, there was a couple of questions on that. So, in the lower part of the image, there is a cash flow, right, from for a person with the age of 35. So, there are a couple of questions. I'll just ask about that. So, for an example, somebody is at 35 years of an age. Say in 2021, he is investing 10 lakh rupees. 2022, 23, 24, 25, he will not get anything. Correct, Sadaship?
Yes, yes.
And from 2026 end, he will start getting 73,700 per year,
Yes.
right? For the next 45 years.
Right.
45 years from today means by 2066, right?
Right.
So by 2066, he will continue get 73,700 per annum for this 10 lakh example. So
Right.
what what will happen in case in between if something happens to an investor, or so can you
Right.
highlight on that point?
Good question. So something happens to the policy holders after the income starts. So basically, the next person in the family who is the nominee, so he have basically two options. Either they can continue to take income of the plan as it is for the next 40 or 45 years, and then the return of investment amount. That is the first option. The nominee will continue to get that. Or the nominee can come to Tata AIA and they can tell us that the plan can be closed and we can give him or give her a one time commutation value. So in that case, all of your future income and the return of investment, so that will be discounted to the present value, and one time value will be given, the policy will be closed. So both the options are open for nominee. If they want, they can continue to take the income and the return of invested amount, or they can take one time closure amount and the policy will be closed.
Right. So in case of mishappening to an investor, this 73 investor has an option to continue this 73,700 till 2076,
Right.
66.
Right.
Okay, right. There is another question that generally for knowledge purpose, where does this money will be invested by insurance company? so that they are assuring for this amount for next 45 years.